top down, I think for the United Kingdom, it's an extremely challenging environment. So and I think we spoke about this last time. So if I look at the 5 key health indicators, GDP, current account deficit, budget deficit, inflation, cost of borrowing, all 5 of those look negative versus our European friends and colleagues. The one that people like to concentrate on is, and I will come to your question, the one that people like to concentrate on is the employment number, which looks better. But that is a double-edged sword because that is feeding directly into inflation. And you can see that in the wage.
It's fell quite aggressively, if you looked at the data this week.
But they're still north of 1 million.
Yes, they are.
So it's still a challenging place, and you're seeing wage growth at 6.7%. So therefore, I find it difficult to be overweight UK financial instruments, and that would include the FTSE 250 and sterling. Though the biggest question from our clients, is about bonds because of the yields. So to answer your question on the FTSE 100, it's been a very successful trade, but I think it's a very crowded trade, and it's a very crowded good trade. If you look at the components of the FTSE 100, it's tangible assets, it's oils, it's banks, it's pharmaceuticals, it's been good. And I would go back to, so if you have a large position in the FTSE 100, I would check that. I would review your risk management on that. How big a weighting is it?
Now, that's fascinating because you are talking a voice of reason, a voice of caution, at the same time when he and I have had an absolute queue of buses, like the number 14 to Putney or 22, yeah, whichever one you get. But a queue of buses of analysts and strategists coming on this show saying we're getting more bullish, we're getting less bearish, we're actually going from underweight to neutral, we're going from neutral to overweight. And they've missed the boat, they've missed that bus.
Yeah.
And now they're all just coming on board saying, yeah, we like the market, and yet we've had 1,000 points rally.
I think we need to see, so we've seen strong markets in Europe, strong markets in the US, strong FTSE 100. And I think we need to, in order for that to push on, we need to see some real concrete examples of good news. And that's why I'm a believer in a multi-asset portfolio. That's why I'm a believer that I think that we are in a new paradigm post the Goldilocks period of QE and very low interest rates. And I think, therefore, it's also about having more active risk within your portfolio. So I need to see the numbers. We've had a good run. To move on, we need to see these numbers come through.